Welcome to the Friday edition of the Tech Stocks Daily Podcast, where we slice through the buzz and serve up fresh tech market insights. Today, we're diving into Supermicro's intriguing options trading whirlwind and uncovering the twists in Pinterest stock tumble after their Q3 results. Hold on to your helmets. Toast is serving hot success, leaving investors with a hearty appetite as shares surge higher. Plus, we're exploring Block's bold move into a Bitcoin-centric future, dissecting their recent earnings report. Tune in as we explore which stocks are sizzling and which are cooling off. Get ready for some fast-paced financial deliciousness. All right, folks, let's dive into today's spicy tech tidbit about Supermicro, traded under the ticker NASDAQ SMCI. This tech juggernaut has recently drummed up quite the buzz in the mysterious world of options trading, and here's why you should care. First things first, Supermicro isn't your regular desktop brand. It's a beast in high-performance server technology. This company delivers edge-leading heft in the cloud computing, data center, big data, high-performance computing, and Internet of Things markets. Imagine them as the silent powerhouse behind the digital drool-worthy cloud innovations that you smear across your everyday virtual activities. Now on to the delicious entree. Financial giants are apparently throwing shade and love at Supermicro simultaneously. Our sleuthing into the options history for SMCI brought up 39 unusual trades. They're like snowstorms in summer. And the plot thickens. 43% of traders are playing the sunshine card, while 51% seem to have seen a few clouds on the horizon. This mix includes 23 put options collectively valued at around $1.78 million, and 16 call options going for about $804,721. But why are these numbers so titillating, you ask? Well, option stunts, especially the quirky ones, can be harbingers of change. Market movers are hyper-focused on SMCI dancing between a spicy $13 and a smashing $87 over the past 3 months. That's quite the swing for those keeping score at home. These constant wiggles and jiggles in trading volume and open interest are more than mere numbers. They're treasure maps for keen stock researchers hunting liquidity and investor interest. The interest party's conspicuously loud chatter in certain price brackets could point to a cascade of next-level market tomfoolery. You don't need to be Timbuktu Timmy in statistics to know this is juicier than your average trading dust-up. Financial heavyweights have been out and about making undeniably bearish moves on SMCI lately, clearly steering the wheel towards pessimism in anticipation of how this server stalwart stock might flow. For all you aspiring day traders ready to live and win among these shifting tides, keep your goat's eye peeled for these specific movements. Mastering this turbulent dance in options trading can bring high rewards and not so small risks, like trying to ride a digital roller coaster during a superhero brawl. Arm yourself with heaps of knowledge, a sprinkle of audacity, and eyes wide open to the kaleidoscopic movements of your favored stocks as portrayed by everything from Benzinga Edge's snackable boards to real-time Vroom alerts. So there it is, friends. Supermicro's flurry of market intrigue wrapped up nicely, with all the bells and bullish whistles you'd need to make sense of this techie telenovela. Tune in, because in this world, it pays to stay option-rich in enthusiasm and insight. All right, tech enthusiasts, let's dive into today's hot topic, Pinterest. It's like everyone on the street is talking about why Pinterest stock seems to be taking an escalator downwards instead of up. What's that all about? Well, grab your virtual popcorn and let's unpack it. So here's the scoop. Pinterest recently published their third quarter financial results, and let's just say Wall Street didn't exactly throw a party afterward. The stock took a nosedive, dropping around 15% and is getting painfully close to its 52-week low. But wait a second, Pinterest's financial report was a little quirky. They beat some expectations, but fell short on others. First, the not-so-great news. Pinterest's EPS was only 4 cents, falling short of the anticipated 7 cents. That's like expecting a jumbo-sized birthday cake and getting a cupcake. The sales did, however, clock in at a slightly surprising $898 million, sneaking past the forecast of $896.34 million. It's a tiny win, but like winning a mini stuffed animal when you wanted the giant one at a carnival. Now, even though they posted a record 537 million monthly active users and bumped revenue up by 18% year over year, ad pricing was a bit of a bummer, falling by 17%. You see, Pinterest makes its dough by selling ad spots next to all those inspiration-loaded images. Advertisers bid for these spots like they're front row seats to a concert. But during Q3, advertisers weren't exactly splurging. It's a classic case of too many ads, not enough demand, causing prices to fall. Despite all this, the platform did up its game with a whopping 41% increase in ad impressions. That's a bunch more ads being seen, thanks in part to a healthy 11% rise in user growth. To put it dramatically, Pinterest was like, look, we'll just show more ads if they aren't worth as much. It's not the go-to strategy for revenue nirvana. Ideally, you want advertisers batting down the hatches to grab your spots rather than saturating your users' eyeballs with ads. However, with every rain cloud, there's a silver lining. Pinterest CEO Bill Ready highlighted that their AI investments are driving results and pushing them forward in personalized ad experiences. Plus, the powers that be approved a shiny new $2 billion stock buyback program, and with the stock prices in a slump, that's potentially a savvy move in the long run. While Pinterest is far from a sinking ship, investors are scratching their heads and wondering about the long-term sustainability. Will Pinterest figure out how to say no, thank you, to bombarding us with ads and find better pricing conditions? Only time will tell. So keep your pins ready, because it'll be interesting to see where this digital corkboard's revenue journey takes it next. Stay tuned. Hey tech fans, let's dive into the sizzling hot news coming from TOST, the cloud-based wonderkind that has got Wall Street and probably a few restaurateurs raising a glass today. Why is that, you ask? Well, TOST just served up some pretty delectable Q3 earnings, and investors are gobbling it up. Shares of TOST rocketed to the skies on Friday, kicking off the trading day a whopping 17.8% higher before toasting. See what I did there? To a respectable 12.6% increase by midday. So what's fueling this frenzy? It's their latest earnings report, folks. Let's cut into the juicy details. Analysts had set their expectations fairly low, estimating earnings at a measly 0.01 cent per share with a revenue projection of about $1.29 billion. But TOST didn't just meet these expectations. It transformed them into an all-you-can-eat success buffet with earnings of 0.07 cents per share and revenues punching slightly above to land at $1.31 billion. One key metric causing this cheer is the addition of 7,000 net new customer locations, bringing TOST's restaurant network to a filling 127,000 spots. That's potentially more breakfast, lunch, and dinner than you could handle in a year. Now, let's add some spice with market penetration. The company believes it has only reached 14% market engagement in North America, suggesting a heap of room to grow. That's a lot of happy chefs and servers getting a helping hand in cutting operational headaches. And get this, TOST's magic isn't just in numbers. Restaurateurs love it. Why? Because it makes life easier. And who doesn't like fewer metaphorical grease fires in their kitchen? Companies seem to flock to TOST almost as if by the scent of fresh-baked bread. This word-of-mouth, user-friendly vibe has a genuine impact, and the remarkable financial results to back it up don't hurt either. In terms of financial prowess, TOST clocked a hefty adjusted EBITDA at $113 million, shooting up sharply from $35 million in the same quarter a year ago. Their gross payment volume was also impressive, clocking in at $41.7 billion, an increase of 24% year-on-year. With their robust cash reserves of $1.3 billion and a pivot towards innovation with new offerings like branded mobile apps and SMS marketing, TOST shouts, "We are well positioned." Their upbeat outlook extends into the fourth quarter, anticipating a gross profit boost in the range of 32% to 35% for subscription services and tech solutions. All to say, TOST isn't just surviving, it's thriving. They don't plan to just finish this year strong. They want to sprint into 2025. Investors seem ready to pre-order what TOST is cooking up, even if it comes at a premium of trading at 48 times forward earnings. TOST is piping hot, and this stock has definitely made everyone sit up and say bon appetit. Whether you pronounce it TOST or toast, one thing's for sure, these shares are smoking hot today. Hey tech enthusiasts, today we're diving into the headline-grabbing news surrounding Block, the company formerly known as Square. They've made quite the splash with their latest earnings report, and we're here to break it all down for you. So, what's the 411? Block just released their third quarter financials for 2024. Now the good folks over at Zacks had some predictions, and true to form, Block's adjusted earnings matched the consensus estimate, clocking in at 88 cents per share. That's a whopping 76% jump from last year. Sadly, while they took home the earnings medal, they dropped the baton on revenue, missing expectations by about 3.9% with $5.98 billion. But hey, it's not all doom and gloom. Revenues still saw a 6.4% increase compared to last year. Block's stock performance, however, has been a bit of an underdog story, trailing behind the Zacks technology services industry's rockstar returns. But put away those tiny violins because they've got some promising fourth quarter predictions and an optimistic outlook for 2024. The kicker? Jack Dorsey, Block's wide-eyed CEO, is throwing everything, including Bitcoin mining chips, behind the company's vision of a Bitcoin-centric future. Talk about putting your block on chain, am I right? Let's talk Bitcoin, those virtual gold nuggets where everyone's hoping to strike it rich. Block's stack of 8,363 BTC is sitting there with a tidy value of about $530 million. An addition of $15 million was tossed onto the Bitcoin pile this quarter. Dorsey's plan to allocate 10% of the company's monthly Bitcoin-related gross profit to buying more Bitcoin might raise a few eyebrows, but hey, he's playing the long game. In another move, their Cash App, partner to Lyft and cozy with Google Play, continues to revolutionize how we transact, yet the revenue from Cash App transactions fell by $26 million. Meanwhile, in the world of hardware, Block's mining aspirations have the potential to break new ground, or rock, since we're talking about chips, aiming for big gains in the realm of cryptocurrency mining. Granted, the stock took a little tumble. Block was down 1.62% after hours, probably a few nervous investors listening in on these reports. But here's the deal. With Jack Dorsey steering Block like a captain gazing at the Bitcoin sunset, it seems they're dead set on stamping out a digital frontier with aspirations of turning Bitcoin into the internet's native currency. Now guess what? It's your turn. I'd love to hear what you think about Block's progress, prospects, and Bitcoin boldness. Do Do you think Jack Dorsey's vision for a Bitcoin-centric universe will pay off? Or is this a giant financial gamble worthy of holding its breath for higher stakes? Share your thoughts in the comments, and let's chat about it. And that's a wrap on Block for today. Keep those comments coming, and let's keep the conversation lively. All right, let's put on our investor hats and dive into the market of hot toasted possibilities with Toast. Based on today's sizzling hot news, we might be leaning towards a buy suggestion, and here's why. Toast just served up a feast in their Q3 earnings, smashing expectations with a 17.8% increase as the trading day opened, and our midday report still showed a tasty 12.6% rise. This impressive performance was thanks to the fact that Toast blew past their anticipated earnings with 0.07 cents per share versus the predicted 1 cent. Talk about exceeding expectations. The reason to possibly opt for buy rather than any plate-swirling sell-offs is thanks to their delicious mix of both fundamentals and expansion potential. Toast isn't just sitting pretty. They've expanded to a lure-worthy 127,000 restaurant locations and are innovating with tech offerings like branded mobile apps, appealing to restaurateurs keen on minimizing operational headaches. Their potential is far from fully cooked, with only a 14% market share penetration in North America, meaning there's plenty of room left for expansion in their field. Combined with robust financial strength, including adjusted EBITDA soaring to $113 million from just $35 million year-on-year, Toast is paving a path to triumph into 2025. The company's upbeat glide path outlook certainly serves spice to its future growth in the market. Now, before you sprint off to click buy, remember that investing should mimic sizing up a new dessert rather than gobbling it down instantly. Pile on your homework, do your due diligence, and analyze the broader context of Toast's market ambitions, competitive edge, and any culinary hazards in the tech sector that could come into play. In a nutshell, Toast stock looks appetizing, but as always, pair your interest in trendy plays with thorough research to keep your financial plate as balanced as possible. Happy investing, and continue asking the right questions. Today's market stirred up quite a flavor combination. Supermicrocomputer got everyone's eyes on options. Pinterest's colorful pins took a twist. Toast saw its shares rise like bread in a good oven, and Block cooked up some Bitcoin buzz with its earnings. Tech stocks delivered a platter of action and opportunities to ponder. So, if you're left hungry for more market intel, don't forget to like, subscribe, and share this video with your friends. Join us again on Monday when we serve up another fresh batch of tech news bites. And until then, have a fantastic weekend.